Success consists of getting up just one more time than you fall. Oliver Goldsmith. My friends, getting up, getting going, keeping going. That is what it is all about. Consistency, persistence. 5, 10, 15 minutes, however many minutes a day you will make available to learn this. I ask 10 to 15 minutes a day. Reviewing these charts with us, our recordings typically take less than 15 minutes. Also, we got special trainings for you every day. A great training today if you're a subscriber for free. Be wary, very wary of profits. If you're not a subscriber, become one. It's free. Go to chartingwealth.com, sign up. That list is never spammed, never shared. Now, let's jump into these markets. Things down for the day, fairly decently down for stocks. S&P 500 down 1.82%. NASDAQ 100 down 1.5%. Something to note there. We told you to be on the lookout for. We'll talk about that in just a minute. Bonds up as they should be. Gold down just a little bit. First, let's jump into the S&P 500. Starting the week off down. Now, remember, the S&P crossed over going down back on the 25th. Crossed over very weakly, going up. That was the 25th of September, the week ending then Friday. Crossed over going up very weakly back on the 16th of October. And of course, this week, trying to cross back over, going down. We'll continue to watch, see what there is to see there. It's just the first day of a 5-day candle, but that's important to see. Now, we'll watch as it develops. Look at the 2-day chart. It closed crossing over, going down. So we're going to move the 2-day crossover and note that. So that means that we weren't in an up trade at that point. We've talked about the difficulties with that. And we see that the 2-day now is confirmed crossing over, going down. This was a Friday, Monday candle, and it did end. Price percent oscillator crossing over, going down. Derivative oscillator still positive. Look at this half-day chart. You can see where things slammed down on Friday afternoon, then down on Monday morning. A little bit of recovery Monday afternoon, so it's not as low as it could have been. But look at the derivative oscillator gaining downward momentum, price percent oscillator heading down. That's where we are with the S&P. Now, this is the one we told you to be on the lookout for. Q's never tried to cross over going up. Price percent oscillator pulling away from the red signal line first day of this latest 5-day candle. Derivative oscillator still losing downward momentum but is negative. 2-day chart. Check it out. Every day for the last 6 days we have seen things plummeting down. 3 down candles. Look how we ended the day. We told you to be on the lookout for a 2-day recross. Since the weekly was already in a confirmed down move, well, bingo, that happened. Were you watching? Were you paying attention? Did you jump into that down move? I hope that you did own a practice trade, because that was something we told you about. We asked you to consider getting into in a practice trade. I hope you're filling out your trade worksheet. If you're a subscriber, you'll see those PDFs every day. You get those in your show notes. If you're not a subscriber, why not? Become one. We want to have you. So that's where we are as far as the 2-day recross goes. Let's check out the half-day chart. What do we see going on there? Well, I see that we need to redraw our trend line on that half-day chart. We can do a better job at that. There we go. Down in the morning, a little bit of a pull back up in the afternoon. Price percent oscillator still heading down. Derivative oscillator gaining downward momentum at the end of the day. So we'll continue to watch, see where things go on this practice trade on the Qs going down with the 2-day recross. We told you to watch for it. Let's go on to bonds. Bonds up for the day, 0.94%. Hasn't broken that weekly trend line. We do see, now again, this is a solid green candle. That is a slowdown in the down movement. It's not a green up candle. It's a solid green candle. Slowdown in the down movement. Price percent oscillator still heading down. Derivative oscillator gaining downward momentum. Look at the 2-day chart. It's just gone flat. We can see that we did plumb a lower low over the last 2 days, but again, we have a green spinning top, lots of downward pressure from that downward movement, and it is a solid green. It's not an up candle. It's a slowdown in the down movement. Prices below that 2-day trend line. Derivative oscillators losing some momentum. And what do we see on the half-day chart? Popped up strong on Friday afternoon, up on Monday morning, and then sort of peeling back some on Monday afternoon. So we'll continue to keep our eye on 20-year bonds, see how they're going to continue to flush things out. Now we go to gold. Gold a little less than flat, 0.05% down for the day. But look at gold, still not telling us what it's going to do as far as the Heikin Ashi candlesticks go. Sliding sideways. We are starting off with a red down candle for the week. Price percent oscillator heading down. Derivative oscillator negative, losing downward momentum. What's the 2-day chart doing? It is flat, my friends. Look at how flat the price percent oscillator has been for many, many, many days. This latest 2-day candle is a red down candle, a little bitty one after 4 or 2 prior 2-day candles going up. Not a whole lot. Again, that's why we see that sideways slide. Price percent oscillator, like we said, is flat. Derivative oscillator had popped over green, and this last 2-day candle is weakening just a little bit. We see that derivative oscillator weakening just a little bit. So we'll continue to watch, see what there is to see and learn here. We look at the 4-hour chart, or the half day, sorry. It's 195 minutes to be exact. For years we called it the 4-hour chart. Of course, that wasn't correct. What do we see going on? Well, it crossed over going down, of course, back on the morning of Friday. We saw in the afternoon down a little more. And as we continue to watch things, we can again see how this continues to slip sideways and down in post-market. So that, my friends, is where we are as we watch these candles, as we see what's happening. Of course, we'll continue to keep our eye on gold. All the mavens will tell you gold is going to pop up to $15,000 an ounce. Well, my friends, it ain't happening yet. Now, it may be getting ready to at some point. But again, gold is still down on all 3 of our charts. I'm ready, waiting, and able to see that baby crossover and rock it up, but it ain't happening yet. We do have that 2-day recross play. Hopefully you jumped into it this afternoon, heading down on the Qs. We'll see how that goes with us on our practice trade. And again, waiting to see how the S&P is going to sort itself out. Same with 20-year bonds. Folks, that's where we are as we end the day. Thank you so much for being with us. If you don't have our book, support us. We need your help. Purchase our book. We've got the 2nd edition of Charting Your Way to Wealth. We have an autographed copy for you. You will love it. All of the folks who have bought our book, we have rave reviews. It is the quick down and dirty on what we do, not a wasted word there. Again, follow the link in the show notes to purchase it. God bless. All the best from the whole team at Charting Wealth World Headquarters.